Hello, everyone, and welcome to New Year, New Books Financial Habits to Set You Up for Success, presented by ABC Financial Group. Today, and Wesu Cobb Phillips, managing partners and partner at ABC Financial Group. Together, Zakia and Wesu serve as part-time CFOs for growing and established firms and small businesses nationwide. With over 30 years of experience between them, they lead a team of accounting and tax experts, from bookkeepers to CPAs. They strive to take the stress out of money management and give business owners the freedom to invest their time back into the growth of their company. With a passion for numbers and financial systems, Zakia Ballard heads ABC Financial Group's business and consulting operations. Through her commitment to community development, she aims to empower business owners by providing the vital resources and support needed to help entrepreneurs thrive. As a partner, Wesu Cobb Phillips leads ABC Financial Group's tax and accounting departments with heart, strategy, and purpose. More than just crunching numbers, his work focuses on building legacy, creating opportunities, and leading with integrity for the next generation and beyond.
Thank you, Camry. Financial habits to set you up for success. Again, I'm Zakia, and in this power-packed hour, it's designed to help you clean up your books, gain clarity on your finances, and step into 2026 with confidence, structure, and a solid strategy. This webinar is brought to you by ABC Financial Group, and we're excited to have you here. Whether you're a solopreneur just getting started or a seasoned business owner finally ready to conquer all the chaos in your books. And for those of you who are new to us, ABC Financial Group is a boutique advisory and financial operations firm focused on helping businesses of all sizes and entrepreneurs master the money side of their businesses. Our mission is simple: to help you build smarter financial systems, make data-driven decisions, and reduce the stress that comes from not knowing your numbers. So whether you're here and never organized your business finances before, or simply want to upgrade your current system, you're in the right place. Here's what you can expect for the next hour. We'll talk about why setting new financial habits now, not in April, is the smartest move you can make. We'll break down things like revenue, expenses, and compliance without putting you to sleep. You'll leave with tools that you can start using immediately. And at the end, we'll show you how you can get some extra help if you want to take a deeper dive into your finances. Sounds good? All right, so let's start. Every year, we see a familiar pattern play out. Talented, driven, hardworking business owners, people with real revenue, real clients, real growth, wait until tax season to care about their books. And by then, it's chaos. Receipts are buried, bank accounts aren't reconciled. You're asking your accountant to perform magic with incomplete data. And what's the result of that? You're probably overpaying in taxes, often by thousands of dollars, because deductions weren't tracked or categorized properly. You're unclear about your true profit. You know what came in, but not what actually stayed. And maybe most frustrating of all, when a lender or potential partner or even a client asks for financial reports, you're left scrambling. Here's the truth. Once you start generating real income, winging it just doesn't scale. And we get it. You didn't start your business to spend your nights in spreadsheets. But the longer you delay creating a strong financial system, the more expensive that delay becomes. And lost deductions, poor decisions, and missed opportunities. So the goal of today's session is to help you break that cycle. not by giving you a 300-page accounting textbook, but by showing you the 20% of financial habits that drive 80% of your clarity. Because whether you're making $10,000 a year or $10 million a year, a clean, accurate financial system isn't just about bookkeeping. It's about leadership. It's about treating your business like an investment, not just a job you own. And that's what this session is here to support you with. We're going to walk through the exact building blocks that help you move from reactive to proactive and from guessing to knowing. It's a new year, so let's build new books and set you up for success. So now that you understand why a clean financial system matters, let's talk about the foundation of that system, the chart of accounts. You can think of the chart of accounts as the blueprint of your financial system, the structure that organizes every single transaction in your business. But it's not just about categorizing things for taxes. It's actually designed to mirror how your business operates. Just like your business has different parts, how you earn money, how you spend it, what you own, and what you owe, your chart of accounts is divided in that same way. There are 6 main categories, and each one tells a different part of the financial story. First, you have assets. This includes everything your business owns or controls that has value. Cash, bank accounts, equipment, inventory, and accounts receivable, which is money owed to you. These accounts show your financial strength, what you have. Second, we have liabilities. These are your business's obligations, what you owe. Credit card balances, loans, unpaid taxes, accounts payable. Together, assets and liabilities form the foundation of your balance sheet, which is a snapshot in time. Third, we have equity. This is the owner's claim on the business. Think about your initial investment into the company, any retained earnings, and distributions. Equity helps you track the value being built or withdrawn over time. It's also what matters when you're preparing to raise money or sell your business. Fourth, we have revenue. This is the income flowing into your business. But here's the key. It should reflect the different revenue streams that your business has. Product sales versus services, one-time versus recurring, and platform-based income, such as Shopify, Amazon, and client retainers. And you separate this because when you break this down clearly, you can see what's actually working and where you can grow. Next, we have cost of goods sold. These are the direct costs tied to delivering your product or service. For a product business, this may include materials and production. And for service business, this could include subcontractors or project-based labor. This is crucial for understanding gross profit, what's left after fulfilling a sale. And lastly, we have operating expenses. This is everything else it takes to run the business. Software, marketing, office supplies, travel, payroll. Those are just a few. And these are what you subtract from your gross profit to arrive at your net profit or your bottom line. So to recap, assets are what you own, liabilities are what you owe, equity is what you've built or taken out, revenue is what you earn, and cost of goods sold is what it costs to earn it. And lastly, expenses is what it costs to operate. The chart of accounts creates a map of your business in financial terms. It gives you visibility to make confident decisions, monitor performance, reduce tax liabilities, and communicate clearly with accountants, lenders, and investors. These accounts are then separated to help provide financial statements. The first of the two main financial statements is the balance sheet. This contains your assets, liabilities, and equity. And a way to remember this is a version of the balance sheet equation, where in a different form, equity equals assets minus liability. The second is the income statement, often referred to as the profit and loss statement. This includes all of your revenue, cost of goods sold, and expenses. Next, Wei Su will talk more about revenue and expenses.
Today, we're going to talk about revenue, one of my favorite topics. Revenue is what your business thrives on. So the first thing we talk about revenue, we really want to make sure we have a North Star, an amount we understand without reservation. We want to define it for the year. Most organizations say, I'm going to make money. Well, what does that mean? So for this example, we want to talk about revenue in a global sense. We want to use a number, $750,000. $750,000 for your business may be aggressive, may be much greater than your norm, but we want to create this number without reservation, without qualifying it, without putting it, only if. We want to define that number. We want to make sure we understand this is what we're going to do for revenue. Once again, our annual goal. Our next part is to break this down into more easily digestible parts. We then want to figure out what is a quarterly amount based on this annual number. Taking that, dividing it by the 4 quarters. Understanding quarter 1, January through March, quarter 2, April through June, quarter 3, July through September, and quarter 4, October through December. We understand revenue is not earned equally each quarter, but it gives an understanding of what we can compare against when we're looking at our revenue. Once again, our global annual revenue is $750,000. Our quarterly revenue is $187,500. We now want to see, okay, what does that look like monthly? We know in a quarter, there are 3 months in one quarter. We break that down. That now becomes $62,500. That's still a big number. Still a big number. We then want to say, okay, what does that look like for 1 month? And in that monthly goal, we've said, hey, let's assume that 25 work days in that monthly goal. Although we know in a month we can have 31, month of February, which we're in, to be 28, on average it's between 30 and 31. We want to understand our goal of 25 work day to allow times. There are going to be days where you're not going to be working on your business. Be days where you're going to have to take care of things that are business related. They're not necessarily going to generate revenue. So if we use 25 days, we can come to an orderly understanding of a monthly total as well as looking at the yearly total. It also allows for downtime. One of the things that we understand as small business owners is we don't build in downtime, time to say, hey, I need a day or two to reset my calendar as I go and attack the world. So we've now taken this large goal of $750,000. We broke it down to quarter to monthly to now a daily goal. So now that daily goal is much more tangible for us to look at. So now it's saying, hey, I don't have to earn $700,000 in a year. No, I just have to earn $2,500 per day. Now, the key part is that can be any of our product mix. What Zakia talked about in our chart of accounts, revenue can come in a lot of different forms. It can be a small dollar amount activity or a large long-term project that may take numerous resources over many months to earn. So when we're looking at our annual goal of $750,000, we bring it down to the daily goal of $2,500. We can now understand how we get to this number. We went from a large number annually down to a daily goal. And then once we have that daily goal, we're now looking at what sort of things that we make by product mix. Are we selling 10 widgets at 25 cents each? Are we doing a long-term project as a real estate agent? I may sell one house a quarter, or I may sell 10 houses a month. What does that look like in my product week? And I'm also building my downtime. That's a key component in this, because we're not going to always be selling. We're going to sometimes have to deal with downtime. Now, obviously, we talked about our revenue. Now let's talk about the dreaded expenses. Expenses come much faster than revenue. I like to equate revenue as a marathon. It's a long-term process to get there, and expenses are a 100-yard dash, much faster, more frequently, and more often. Well, to understand how expenses should be viewed in the most basic form, with the IRS tax code said expenses to be deductible must be both ordinary and necessary for your business, and used to produce income at the gross level. One key component of this is not profitability. I want to take that away from that. The key part of these expenses must be used to drive profitability. Drive gross income, not profitability. Profitability means, hey, I have more revenue than expenses at the end of the year. That's a key distinction. And what is ordinary necessary is not the same for every industry. There are universally accepted ordinary necessary expenses, but your industry may have some differences. Some of the things we want to talk about when we're looking at our expenses is, are you recording them? And going back to our chart of accounts is, do we have sufficient line items to clearly identify the expenses that we think we're going to deduct in our business, and are we tracking them, and do we have a place to record them? So your chart of accounts is really a key component to look at your expenses. Do you, for instance, if I'm a restaurant, I may have a line item called food is going to be treated differently than if I'm a consultant and I travel. The food there is treated as a business expense, where a restaurant, the food there is treated as a component of how they generate revenue. And the key part about it is, are they tracking that activity? So once again, are expenses ordinary and necessary? Are they used to produce gross income? Those two, or how you want to think, three components are what make an expense deductible. Some commonly expenses we have is office and lease space. Are you leasing office, co-working space, short-term lease, space in your home? Are you having an operating lease? Are you having professional services? Have you hired an attorney to review your documents? Have you hired an accountant like ABC Financial Group to work on your taxes and to help do your bookkeeping and monthly planning? Do you have technology fee? Are you in a heavy industry, for instance, where you see social media influencers? Well, technology is a big component. Are you buying software to edit videos? And are you buying music for your videos because you have to pay licensing fees? And are you paying dues to Facebook or Instagram to promote yourself? All these things are now expenditures that are allowed to be deductible, because they are what? Both ordinary necessary for your industry and are used to produce gross income. Some other things that you can have are travel. And this is a topic that is heavily tested in terms of from the IRS. People says, oh, well, can I go to Hawaii on a business trip? Absolutely. But is the purpose of Hawaii ordinary and necessary for your business? If you are a virtual accounting firm, maybe Hawaii is not part of that business. If you're selling real estate in New Mexico, going to Hawaii may not necessarily further your business. However, going to Hawaii may make sense if you're attending a professional conference to increase your education. So some of the things we talk about is educational goals. Are you going to classes? Are you getting personal development? So that Hawaii trip may now lend itself to being professional development as you get more understanding of your business. Are you getting insurance? Insuring not only the business, insuring vehicles, insuring your products. How are you buying books that help you understand your business? Another things are, next slide, can be professional development, education, and our cost of goods sold. Next slide, please. And last but not least, to use these expenses to understand how they incorporate with your chart of accounts and what your chart of accounts does for you. Thank you. Cameron?
We are now going to open up the floor for questions related to the chart of accounts. So to any of you viewing, if you have any questions related to the chart of accounts, go ahead and drop them in the comments now for our partners. So our first question I'll give to you, Zakia. This person would like to know, what's the difference between a chart of accounts and a general ledger?
Okay, so you can think of the chart of accounts as the blueprint or master list of all the financial categories in your business, as we discussed before. So that would include things like your assets, liabilities, revenue, and operating expense. And then the general ledger is the actual record of every transaction in your business that is organized by the list of chart of accounts. So they are very much related. Only general ledger goes into every transaction. Chart of account is just the overall categorization that you've created. I hope that helps.
Thank you. That was helpful. We also have another question. This person is wondering, how often should they update or revise their chart of accounts? Waisu, could you answer?
Good question. Definitely, when you first start your business, you should really spend time looking at your chart of accounts. As I previously talked about expenses being ordinary and necessary, what are some typical expenses that happen in your business, and develop a chart of account that aligns with those activities. One of the things I find that people tend to do with the chart of accounts is make them so detailed that they end up becoming voluminous. That's the other way. So really in the beginning, spend time on it, and then annually look at it. Have a discussion, sitting down with your accounting professional and says, does our chart of accounts still align with our business? Have we added a new line to our services and products that now incurs an expense category that we previously didn't have? One of the ones we've seen a lot recently are credit card settlement fees. So if you're doing a lot of things online, things of that nature, that may be a line item that didn't have it when you first started because you didn't have a lot of transactions. So at a minimum, you want to look at it when you first start. We recommend at least annually reviewing it to make sure it aligns with it. And then if there is a change, a dynamic change, then review your chart of accounts again to make sure it aligns with what you understand your financial information to be.
Thank you, Waisu. Zakia, back to you.
One of the most common questions we get is, can you just show me what a clean chart of accounts actually looks like? And so we're giving you exactly that. You can download your free chart of account template using the link on the screen right now, or you can go directly to our website at abcfinancialgrp.com/COA. This chart of account is in the same format that we use with our private clients. It's customizable, streamlined, and designed to reflect real-world business operations. Whether you're a product-based business, a consultant, or something in between, you'll be able to adapt it to match how you earn and spend your revenue. Again, use the link on the screen, and if you need help on how to use it, simply reach out to ABC Financial Group after this webinar, and we can get you started. Now let's switch gears, because even if your books are beautifully organized, there's something else that can quietly cost you big: compliance. It's one of those behind the scenes parts of running a business that doesn't feel urgent until a deadline gets missed or a fee shows up. Or worse, you're flagged for something you didn't even know existed. And for most business owners, that matters a lot more than it used to. So here's what needs to be on your compliance radar this year. First, we have quarterly estimated taxes. So if you're self-employed or operating through an LLC or S Corp and generating consistent income, you're likely required to pay estimated taxes 4 times a year. The IRS does not want to wait until April to get paid. And if you underpay or miss a quarter, interest and penalties will start adding up. So make sure you have your quarterly deadlines blocked off, and ideally that you have a system for saving percentages of your income automatically each month to cover them. Next, we have annual report filings. Most states require some version of an annual report or statement of information for LLCs and corporations. This can be as simple as confirming your business address and members, or a full re-registration, depending on your state. The problem? Most states don't remind us when it's due, right? So you miss it and you can end up with late fees or even a suspension of your business status. So it's good to be on top of those. Beneficial ownership information, or BOI reporting. Many small businesses in the US are required to file a beneficial ownership report with FinCEN. It's part of an anti-money laundering initiative. It's not a tax form. It's just and your accountant may not be handling it by default. You'll just need to report who owns and controls your business, typically anyone with 25% or more, submit their legal ID information, and update info if ownership changes. There are penalties for not filing or updating this information. Some could get up to $500 per day, so it's absolutely something you make sure you get ahead of. Next, we have 1099 filing deadlines. If you paid contractors more than $600 last year, you are required to issue 1099 NEC forms and file those with the IRS. The deadline to send the forms to the contractors and to file with the IRS is January 31st. And if you miss this or file incorrectly, penalties can range from $50 to over $500 per form. This can add up fast. And one of our quick tips is, if you haven't already, start collecting W-9s at the start of every vendor relationship, and don't wait until tax time to chase the paperwork down. Wei Su?
Thank you. One of the things that we get a lot of people say, oh, I know taxes are due April 15th. Well, that's only if you're a personal individual corporation. If you're a business owner, depending upon your entity type, your tax deadline is sooner. And so one of the things we like to let you know is March 15th is coming up. That is the tax deadline for LLCs, limited liability corporations, S Corp or subchapter S corporations, and LLP, March 15th. If you're not prepared and or you need more time to get your county records done, with the valid extension, those returns can be due September 15th. C Corps or traditional corporations and individual returns are due April 15th. Once again, if you are not prepared or you say I need more time because I'm missing documents, you can then, with a valid extension, push the date to October 15th. An extension does not automatically make you an audit risk or there's anything nefarious. It could be information that you needed was not timely provided, especially if you have to do some reconciliation. Depending upon what city and state you live in, there is an annual filing requirement for a business license. If you operate a business, either virtual or in person, through a brick and mortar, there is a business license obligation in most cities and counties. And usually they are free or at a nominal price if you file timely. Another thing is in the state of Georgia, for your annual registration for your LLC and C Corp, there is an April 30th date. This is a different than the business license. This is just to register your business that is still operating within the state and timely. In California, LLCs, LLPs, and have a biannually, every other year, filing of the statement of information. The lack or non-timely filing of this can lead to a $250 penalty, not tax, penalty issued by the state. Corporations, including S Corps, have an annual filing. That requires them to file annually who are the officers as well. This also includes for corporations who are what's called foreign actors, meaning they're registered in another state and they operate within the state for tax purposes. Last but not least, for those clients who are selling items online or have a sales tax obligation, the state of Georgia, the obligation was January 20th, and in California, it was January 31st. It's very important that you understand sales tax is not a tax. It is an obligation you're collecting on behalf of the state for taxes that they would have owed upon the sale. It's not tax on earned income. So to be very clear, sales tax is not a tax on earned income, but rather the collection of cash from a sale and is owed to the state, regardless of how much money you have in the bank. Thank you very much.
Thanks, Waysu. So none of these things are complex, but they are easy to miss. And missing them doesn't just cost you money, it can create stress and red flags. That's why we recommend you using our entrepreneur compliance calendar and vision board, or at the very least, our tax compliant calendar that tracks all the IRS deadlines. With that being said, we like to tell you more ABC Financial Group has on our online store, which you can get directly from our website. You can get to directly from our website. It features items that will help you stay current and up to date with your compliance and other important business deadlines. First, we have our tax compliance calendar. It has all the key IRS deadlines and compliance reminders. There are also tax tips sprinkled throughout, and you can use this calendar on your laptop, tablet, or phone. Next, we have our entrepreneur compliance calendar and vision board. This item is perfect for keeping you organized and inspired throughout the year. It contains all the important tax deadlines, business reminders, and tax tips that the compliance calendar has, but there is also a vision board component that's helpful for most business owners. On the calendar side, you can set monthly goals, view compliance dates, add items on a to-do list, and records notes for yourself. And then on the vision board side, you can set personal goals and track them, define your financial goals, and reflect on your accomplishments throughout the year. And lastly, we have a bundle deal. The bundle deal includes the entrepreneur calendar, and vision board, our budget planner, a laptop briefcase, and a flash drive that fits in your wallet. And for a limited time, we're offering these items on sale for 50% off for the next 7 days until Friday, February 13th. You can use the link on the screen to access the store or go directly to our website, again, at abcfinancialgrp.com.
Thank you, Zakia, for that information. We're now going to open up to the audience for questions. If you have any questions about any of the topics that we've covered so far, whether that's expenses, deductions, chart of accounts, or something in between, feel free to leave them in the comments now. Wei Su, I'm going to go ahead and direct this first question to you when you're ready. This person would like to know, how do you know what counts as a deductible business expense and what doesn't?
Great question. So one of the things the IRS does not do is define exactly what's deductible and non-deductible. It provides the parameter for evaluating. And the 2 or 3 criteria, depending on how you look at it, are the expenses ordinary and necessary, and do they produce, or are they used to produce gross income for the business? So ordinary and necessary is really defined by your industry. You know, if you're in an industry that is really unique, we may have to talk about that. But if you're in an industry that's fairly consistent, like real estate, law office, plumbers, social media, advertising, things that have been around, as long as those expenses are within ordinary and necessary within your industry, and they are used to produce good, they are deductible. And what I tell clients to do is record the expense anyway. Talk with your accountant and tax professor and say, hey, I have an expense I'm not quite sure about. Let's talk about that, and then we can look at it then. The key component is really looking at, is it ordinary and necessary? I know that I can't harp on it enough, because that is what the tax code says. You know, it may be something to you may seem absurd, but in that industry, if that's deemed as ordinary and necessary and does generate gross income or gross revenue, it is deductible for your business. Back to you, Cameron.
We have a viewer who would like more clarification on our digital tax compliance calendar. If they purchase this product, are state compliance dates included?
So currently, we do not include the state compliance dates on our compliance calendar. We only have the federal IRS one. And this is because states have not only the annual report or statement of information, you may have franchise taxes, you may have registered agent requirements, state business licenses and permits. And so if you want to know which type of tasks, deadlines, or anything for your particular state that you may need to add to your compliance calendar, you can reach out to us and we can work on that on a one-on-one basis. It just wasn't feasible to add those to our compliance calendars when there's so many different states and so many different types of compliance needed, depending on like I said, depending on the state.
Absolutely. Thank you for that clarification, Zakia. For the small business owners, we have a question regarding deposits from Stripe, PayPal, and Zelle. How do you properly match these transactions to your books?
Thank you, Camry. That's a very interesting question. With digital media and ability to use those transactions, those are peer-to-peer or peer outside the banking institution. One of the first things I would say, supporting those with invoices. Are those revenue generating activity, and did you bill the client? And so having invoices recorded in your accounting report based on your chart of accounts will allow you to know that this type of revenue payment, whether Zelle or PayPal, is for this invoice. And then the matching now is not looking at dollar for dollar, but rather invoice to cash receipt payment. Because we all know Stripe typically takes a fee out as well as PayPal, so the amount provided is going to be less than the invoiced amount. But if you have an invoice, you're able to at least track it, attach it, and understand the financial activity. And then you're looking at it from a tracking perspective rather more than matching and recording activities in your general ledger. Thank you.
Great. Thank you, Wesu. Our last question is going to be, how do I know if I need to file BOI for my company?
Thank you. BOI has gone through a number of iterations since it started. Currently, one of the things we know is if a business, an LLC or an S Corp, has a member who is a non-permanent resident of the United States, there is a BOI requirement. There's also one of the requirement if a member or an employee has significant influence who's also a non-resident of the United States. And this is a requirement that has gone through legislation and litigation and has come to that. And so it's very important to understand your BOI reporting requirement may change based on how your entity interacts, meaning are you expanding and admitting new members? Are you selling the business? Have you hired someone in a role that may require a BOI reporting requirement? What the BOI is really trying to see is not only does who owns the business, who also has significant influence upon the resources of the business. So a member or an employee could have very low ownership, but have significant influence, and they are the ones interacting with cash receipt and cash payments. And ultimately, the BOI is trying to track monies entered into the U.S. banking system and monies leaving the U.S. banking institution, and to make sure that there's not being used for money laundering. So your BOI is not a standard only reporting now, but rather a fluid reporting situation, and it really requires you to periodically check to see, hey, do I still have a BOI requirement, or am I exempt from BOI because my status hasn't yet changed? Thank you, Karen.
Thank you, Wesu.
Now I just would like to say thank you to everyone for attending. We would love for you to follow us on our other social media platforms, and we look forward to seeing you at our next webinar, which will be March 6th, same time, where we will discuss tax prep, what you must do now to avoid April panic. And I'm sure everyone could benefit from that. So again, on behalf of ABC Financial Group, we want to say thank you and have a great rest of your day.